COSM is currently sitting at critical support. We need to go over the probabilities before Tuesday's session to gain that true edge. Let's go ahead and get started now. What is up, you guys? Thank you so much for stopping by once again on this happy Friday. This is ARCa coming at you with a COSM technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa. With that said, let's dive right into the charts. Okay, so we're looking at COSM on the daily chart here, and this is the statistical side of the analysis. Okay, so I was mentioning that this momentum indicator was capitulating and not capitulating. I was mentioning that it is slightly bearish and still continuing to the downside. So it has now reached some historic low levels, but there is still some more space to continue to the downside. Okay, so right now we're sitting at about 4.5%, right? So I'm sorry, we're sitting at about 4.5%. Okay, so we can actually still go down to about 0.9% historically speaking, of course. And there even could be some iterations that are slightly lower, but no, it looks like 0.9% could be the lowest point that we've seen historically on the momentum oscillator. Okay, so now we're coming from critical. Okay, so volatility is still contracting here, which is only suggesting that this may bottom out at critical critical contraction, which is below the 15 percentile or sometimes even the 10. Okay, so in this case, I'm thinking we might have to run a different back test here, because if momentum actually ends up all the way towards the downside, that means that contraction would essentially max out as well, printing these blue bars like this here. Okay, so that would also entail that we would actually be facing a pretty powerful move to the upside after it's done. So if we're looking at still room and volatility to continue, and also there's still room and momentum to continue, then that falls in line with the next chart. Actually, that falls in line here. This is that support line that I told you was the backup support line in case we fail this green zone. Okay, so we have entered this zone completely, and I must mention here that this is market close 384. So after hours it closed at 385. Okay, so just 1 cent up. So we are now facing the resistance of the 1.618 and this candle here from December 16th, and also this candle here, the wick low of this candle on December 2nd. Okay, so there's a lot of resistance there. I haven't even seen our moving averages, but let's go ahead and take a look at the EMAs as well, as there could be something. Let's just see. Okay, no, there isn't anything there. Our moving averages are still way above us and trying to catch up on the daily. Okay, so my point here is that the capitulation or the downside left in volatility and momentum could very well line up with the last support that we have down here. Okay, so I am talking about particular to, I mean, this is one temporary area of support, the 2.618 at 330, right? I'm just going to go ahead and draw a line here and just leave it there. Okay, this is one area of temporary support where we can actually just find a quick bounce, come back up to the 2.272, and then continue to our actual zone, which could be between the 3.618 at 274 and just slightly above the 3.272, in line with all these candles right over here. Okay, so that could be at about $3.01. So this support level that we're on, that we currently made just as a slight resistance thus far, if we don't recover this, there is a chance that we can actually face kind of a free fall here. Okay, so this is gonna literally free fall, maybe even $1 or a half a dollar or something. Okay, so make sure to watch your longs at this point. Okay, because I already got stopped out 65% my position. My second stop loss would honestly be at this 2 fib right here at 366 for full liquidation of my position. Okay, so that would mark about a 12% loss of portfolio, which is kind of annoying, but things happen, right? So we'll just move on to the next play. So yeah, guys, please watch out with this, because this can essentially have us just slide down pretty fast. Okay, there is a massive area of a psychological component here. Please, let me just go ahead and block out the visibility of the moving averages just so you can see what I mean. Okay, so particular to this candle wick low on October 17th and this candle wick high of October 26th. Okay, so if we just go ahead and draw a box here, you can see that there's a clear void. Obviously, we've already filled the gap with all this price action, but please know that this is absolutely a void that was once and can be used as a slide. Okay, so be very careful with what's going to happen next with COSM. This is me kind of giving you an official warning, okay, as there is a serious threat now. Okay, so let's go ahead and move on to the next chart, and this is going to be the last part of the analysis, which is the RSI. Okay, so on the RSI, we're going to start off actually first with the immediate short-term time frame 30-minute analysis. And actually, I don't know why I don't have my diagram up right now, but it's entirely okay, you guys. Let's go ahead and just explain the details right now before we continue. So there are two halves of the RSI. Okay, the upper half is the bullish control zone. The bottom half is the bearish control zone. Okay, the inner workings are called the weakness percentile, from bull weakness and bear weakness, and the outer percentile is called the strength percentile. Okay, so in this case, in the 30-minute immediate short-term time frame, you can see that there is still some upside potentially to cover or to recover that area that I'm talking about, that to be very important. Okay, the within this chart right over here. Okay, to recover that 1.618 and this support zone. Okay, which could essentially be between $4.01 and about $3.84. Okay, so that's it's kind of insinuating that we may actually recover that zone, but this is not whatsoever a guarantee. This is likely to live out really fast. The 15-minute time frame is suggesting a continuation to the upside, which is also good. We are above, the RSI signal is above the 14-day simple moving average represented by the pink line, which is also a good thing. Okay, so now let's move on to the bi-hourly and keep putting these puzzle pieces together so that we can gauge that overall picture for the following sessions. Okay, so the bi-hourly is still suggesting a little bit of sideways trading, slightly bearish. Okay, now why is it slightly bearish? Because first of all, the 14-day moving average is slightly pitched towards neutral or arguably to the upside, while the RSI is to the downside. Okay, the side that's bearish on this, or that's balancing out to be slightly bearish, is the fact that we're sitting near the gravitational zone of the deep area of the bear strength percentile. Pardon me. And that can actually mean that we can face a type of pull right into that oversold percentile. Okay, this poses a little bit of that threat. Now, the 6 hour is still suggesting downside. Okay, so now let's go ahead and take a look at the exact positioning of this, and it has just now moved slightly outside of that gravitational zone, which could be located at about 38% versus the 40% of the bearish weakness versus strength percentile border. Okay, so in this case, we are suggesting a continuation to the downside and have been using this 14-day moving average as that form of resistance and a sort of guide towards the way down. Okay, we got to be careful with that. Now, the daily time frame is also slightly bearish as well. The part that's more bearish than not is the fact that we're approaching that gravitational zone, so we can be pulled right into that bear strength percentile. Okay, man, we have to really watch what we're doing here. Okay, you guys. So now we're still looking for downside. Okay, we're still looking at downside, but the downside is slight. If we do fail, like I said, if we do fail these critical support levels, there is a void here that we can essentially slide down in. Okay, potential support touch, really quick touch at that $3.30 to only find ourselves finding a resistance at 350 or the current void high, which is about 370, before a continuation down to the 3.618, 274 to 294 area at the 3.272. Okay, so please guys, I hope that you listen to this entire video. All right. So know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I can't suggest for you guys to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own DD and everything will be just fine. But I'm here to help. Okay, so let's just go ahead and take a look at our plays, review them as best as we can, and move accordingly or appropriately. Okay, so that's going to do it for the video tonight, you guys. If you feel compelled to reach out to me, go ahead and refer to the links in the description below. I am actually an accepted affiliate for TradingView software, so please, if you feel that you want to go ahead and chart alongside me with these tickers, then go ahead and sign up with the link in the description below for TradingView, as it will help my trading future out greatly, you guys. So I appreciate everybody for listening thus far. Have a great night, a great weekend, and I will catch you at the bell on Tuesday. Adios.